Welcome back to my ongoing weekly trade campaign on QQQ, currently trading just below $495. I'm Patricia Saylor with Saylor Financial Fundamentals, ready to generate a little more cash to supplement my retirement. My $480 put is set to expire worthless at the end of the day, but the covered call option is within pennies of the strike price. Let's roll a call and sell a new put. The first decision to make is whether to keep the same strike price of $495 or to roll it up to a higher strike price. So first, let's take a look at exactly where things stand right now. QQQ is trading at $494.79. It's up $3.52 a share today. And the current position is a $495 strike price. So in order to make this decision, let's quickly go back and look at where we have been and how we got here. You might recall, if you've been following these trades, that I was assigned to buy 100 shares on August 2nd, and I paid $490 a share for them. Since that time, I've been selling covered calls using these 100 shares as collateral. The first covered call I wrote had a strike price of $475, and I received $102 for it. Then I sold another one that expired August 30th with a strike price of $480. And then I rolled it up to $490, getting a really small premium, but bringing the strike price up to the same price at which I had been assigned to the shares. Then on September 10th, I rolled it out again and received $54. And then I rolled it to $495, expiring today, and received $305.68. So when I summed up all of those, I've received almost $600 in covered call premiums since I was assigned those shares. And the current strike price is $5 a share higher than the price at which I was assigned. So I have two ways I could handle this. I can either keep the same strike price, roll it straight out for maximum premium, or I can increase the strike price to, let's see, $496 or $7, all the way up to maybe $500 for a net credit, and then have a higher strike price, less likelihood that these shares will be called away from me. And if they are called away, I'll receive a little more. I'll receive a little more payment for the shares. So I'm going to look at the possibilities. A couple of rolls and see what kind of premium I could receive. If I keep the same strike price and roll this out 7 days to October 25th, I can receive at least $345. If I increase the strike price to, for example, $497.50, I can receive $220. And if the shares are called away at $497.50, I'll make $250 more just on the appreciation of the shares. But considering that these shares are trading at $495, I can maximize my premium with a straight roll, and the strike price is already $5 a share above the price at which I was assigned. I think I'm going to prioritize bird in the hand or maximum income for today. So I'm going to keep the same strike price, roll it out 7 days, and expect $346 or more in premium. So it filled at 347. Let's go fill out the spreadsheet. So that takes care of the covered call. Now let's go back and sell a new cash secured put. The current put has a strike price of $480, and I'm going to leave that to expire at the end of the day. If I did not have the cash available to secure a new put, I would roll it or I would wait for it to expire before selling a new one. But I've got the cash available. I'm sure this one is going to expire. So let's look out 1 week and choose a new strike price. If I keep the same strike price of $480, I can get $61 today, but the share price is up almost $10 a share from where I sold the last one. So I think I'm going to go up to 485 would bring $112. 488 would bring 164, but is at a higher risk of assignment than I feel like I want to take on right now. I'm going to go for 486. So it filled at 128, and let's put it on the spreadsheet. Time for a quick summation. Calculate our adjusted cost per share. Compare the net liquidating value of a position to the total expense and income to calculate our current profit or loss, which I know is profit. So let's take care of all that, starting with a sum of total expense and income to date since I opened this campaign. And there we have it. My total expense and income is $56,532.92 in expense. Divided by 125 shares means my average expenditure per share is $452.26. And the net liquidating value of the entire position right now is $61,313, which means that I am up $4,780. And if those shares are called away from me, I will still have 25 shares in the account. See you next week, and we will update and continue to adjust this position and bring cash into the account.